The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, if you thought these grain markets were at low enough levels and shouldn't go or couldn't go any lower, well, we saw another flush out on Monday, led by soybeans and by the wheat trade. Corn down in sympathy as well. Tough to talk about some of these prices, but we're going to do our best here and think about what we can do to manage our risk in this environment right now. Joining us for market analysis today on the show, Dwayne Bussey with Bolt Marketing. Dwayne, thanks for being back with us again here on Market Talk. And sorry I picked a tough down day to have you join the show again, but I shouldn't laugh, I should say, because I know a lot of producers are just unhappy. They don't want to talk about these markets, these price levels, and this price action. The bearish hold on this trade is just unfathomable right now, it feels like.
It really is. But no, I mean, I don't know. I'm always one of those guys. You got to laugh at some of this stuff. Otherwise, it'll drive you bonkers. And it is kind of funny. I mean, you have a friendly corn report versus expectations, a report that I looked at and went, man, any other market situation, we'd be up 15 to 20 cents. And Friday, when you couldn't do that, it maybe opened the door for the selling today. But over the weekend, the weather, I always come back to the weather. You got an extended forecast that doesn't look threatening, and you're July 15th now. So extended forecast usually goes out about 2 weeks, and it's like, well, you're almost closing the book on the weather market when it comes to the corn. So I get the selling. Do I think we're overdoing it and the funds record short? And do I want to be short down here? No, but I understand weather's benign and it's fine, and we got to move on from there, I guess, to the next story.
Well, and to that point, in many areas, the same old adage of rain makes grain is continuing to kind of take hold here. And you mentioned funds at or near record short in corn and beans, and just feels to me like it's like the magic school bus. The wheels on the bus, they're gonna drive this thing lower until the wheels fall off, so to speak, Dwayne.
Yeah, those wheels on the bus are running right over every bull in the market, I think, that's for sure. And I started to get friendly to this corn market thinking Eastern Corn Belt was hot and dry or getting there. That was going to be our story. And of course, when the hurricane or remnants of that came through and dumped the moisture there, now everyone's kind of on this feeling of crop conditions this afternoon are going to improve slightly, 1 or 2%. When you're improving in the middle of July and around 70% nationwide, it suggests trend line or above yield. So I guess, you just, with no buyers because of no story, the sellers just continue to have control, even though it is oversold and, getting below $4 now. But first thing we got to do is run out of sellers. And maybe that happens even tomorrow after we get this bearish crop conditions report this afternoon, because I look at support for D's corn at like 393. I thought that would be the harvest low with a big yield. Now I'm kind of like, maybe it happens sooner than I realize, and we're just at the low. Because eventually, remember, these funds need this market to go even lower to make money. So I don't know. It is depressing. You're right. It's hard to talk about. You feel bad for producers, but you just got to make that marketing plan moving forward.
Well, we'll talk about that in a second. I do want to ask, I should ask anyway, obviously the events over the weekend with the attempted assassination on former President Trump. In your opinion, did that have any sort of impact on the markets, whether grains, livestock, stocks on Monday to start the week? It's maybe a little impact in stocks, but overall it felt very minimal.
That's what I was going to say. Probably not in our commodities, but maybe the equity markets. Stock market's been up pretty sharply today. Maybe that's driven by the thought that President Trump gets reelected here now, and some of his policy changes probably help the equity markets a little bit. So, yeah, I think there was a little bit there. On the grain side of things, I don't think it mattered too much.
Okay, all right. Well, let's talk risk management here, because I think that's the biggest thing we can talk about in a price environment like this. I mean, for producers who probably should have done something back in January, February, March, April, May, and still haven't done something, What do they do in this environment, Dwayne? I mean, what are your thoughts?
Let's break it down in two crops. The old crop, which, yeah, I mean, nobody needs to hear like, oh yeah, you should have sold that before. They know that now. Got to forgive them and move on. They're not listening to you and me to find out what they should have done a month ago. They figured that out all themselves.
Yeah.
The old crop, though, even though it's a mistake to still be having it, I kind of lean towards just taking advantage of this very tight basis and letting it go. There's other products through your broker that you can use to buy it back, which I've kind of done myself. We sold all of our old crop, got a good basis, felt good about it, and bought it back, sadly, a little bit ago. So now I'm underwater. So it's like I have my old crop too. But like I said, take advantage of that basis, because if we do start going higher, Jesse, that basis is going to just widen out. Now, I don't know if there's as much old crop out there as USDA makes it sound, or if the funds make it sound. See, the managed funds are short this market because they feel like the farmer is going to come in and be a natural seller soon anyway. And so being short the market's the right thing, but that's up to debate. So let's get rid of the old crop. Let's own it back on paper. We have to. That'll stop the bleeding. If you buy a call option and sell the cash, then the floor is set. As far as new crop goes, I guess, Jesse, sometimes you can make marketing decisions that are to do nothing. And in this case, that's where I'm at. I don't want to panic sell here. I mean, my S&D table for corn looks quite a bit more friendly than the current one USDA has out there. But let's even just look at USDA, what they've got. Say a 2.1 billion bushel carryout. I mean, a year ago, we were looking at 2.3 and we were at a lot higher prices, and the funds are record short now. So I don't think you want to panic sell here. In fact, I've gone as far as the hedges that we did have on, I've exited those. Now, I did those a little bit ago, so maybe it's not the smart move, but I'm saying D-scoring probably has another 10 more cents to go lower, and then a lot of upside, but you need a bullish story. So that's what I'm doing risk management-wise. Really for both crops. Beans maybe, I'm sorry, I'm rambling here, but beans maybe have a little bit more to go down. And so if you're concerned about that, maybe it's put options. Maybe don't be short the board. So maybe some different option strategies. But overall, I don't think you have to panic sell all your new crop right here, because you know exactly what happens to Farmer Joe if he does that here. Then we finally put in a low and we all got to send him a thank you card. So.
Well, I think, Dwayne, to that point, just with these markets in general and all of this bearishness, it really does come down to managing that risk. And I would say not getting complacent in this window, right?
Yeah. I mean, I don't like, if you walk in today and tell me I haven't done anything, what do? I need to sell everything before it gets to zero. To me, that would be a sign that we're near the low. Markets are emotional that way. I think you need to sit down with your spreadsheet. If you decide to do nothing, at least make sure you look through your spreadsheet. Like I mentioned, crop insurance, you're getting close. If you're that 85% revenue coverage level, you're probably really close to a floor anyway, but every farm's totally different. But it's really the old crop I'm concerned about. If you still have that, it's time to definitely let that go and take advantage of this good basis. And we have upside to buy, but right now, actually, Jesse, the way it feels like, I don't think you need to be in a hurry to buy until you get some sort of bullish story, which that's why we keep going lower. It's just a lack of any bullish story.
Yeah, and it may not be until we start harvesting this crop that we get a bullish story. It could be a couple months away, and we don't know at this point. Wheat as well, plenty of bearishness there, especially that big ending stocks number on Friday's USDA report. There's talk that this spring wheat crop is in excellent shape. Good winter wheat harvest. I mean, anything stand out to you in this wheat market right now that we need to think about?
Boy, feels a little overdone, okay, we had the big rally, Russia-Ukraine war. We've taken all that back, thought we had some nice harvest lows, some good support here. And now with the bearish USDA report, we've taken out those lows and accelerated the downside. And I suppose that's because we have bigger stocks here in the US. And you and I have talked before, I've mentioned that the spring wheat crop up here looks fantastic. But okay, maybe we got all the bearish news out there because they've got North Dakota at a record spring wheat yield. And I think it'll just stay there. It doesn't have to get even bigger. It's depressing. Now, Russia exported a little less wheat in the month of June than they did the prior year. Ukraine's still very hot, 100 plus degrees. But we need to see some consistent export news, I think, for our wheat market to rally and come back. I think we're forging a harvest low here, Jesse. This is getting a little overdone. It's just once again, a lack of a bullish story makes it hard to rally, but we're not closing very good today either. So it's just not a fun day, I guess.
We're talking with Dwayne Bussey from Bolt Marketing here today on Market Talk. Let's look at livestock here for a minute, Dwayne. Cattle and hogs, kind of a mixed day in terms of cattle. I know traders are going to no doubt be geared up for an on-feed report coming up on Friday. Felt like, last week, obviously, a sharp downturn to start the week. We ended on a positive note, and then we kind of just tiptoed in with some caution here on Monday across this cattle trade. What's your thoughts?
We held some upward trend lines that we needed to hold in front month live cattle and same in feeders. That's good to see from a chart standpoint. Cash cattle were kind of mixed. In the north, we were higher, a lot of 198. So I call that, marginally higher, a little bit higher. In the south, a little lower, a little lagginess. So we got like a $10 difference between the north and south, which should be enough of a price to just buy the cows in the south and bring them up to the north. But that's beside the point. My point being, though, I do fear that we have maybe seen a high in this market too. And I kind of look at this bounce we had earlier in the day, now not closing the best, is maybe this is an opportunity to get some hedges in place here, especially for our cow-calf guys. 258 to 260, that's great numbers for cow-calf guys. I really like hedging that. That's right where cash is at. I understand it's a little bit harder to hedge on the live cattle front, because you're at such a discount to cash. But cow-calf guys, let's step up. Let's buy some puts. Let's do some LRP. Let's not come on the show in 2 months and talk about what we should have done in July for the cow-calf guy. Profits aren't there very long in cattle. So let's take advantage of that.
Yeah, good thoughts there. Hogs, that's been a dismal, tough market. July off the board Monday, August pretty close in line with July futures, but then you look out October, December, big drops in price there. Anything in hogs that we need to maybe think about here in this window, Dwayne?
Well, I think the biggest thing is I've probably said this before, but I do think we're at a low here now, which you got to hope so. You look at that December contract at $62 and I sure hope it's a low. I think I saw that China's hog production in June was down 3% year over year. So you'll remember they did their big herd reduction thing there. So I think seeing that that's happened and it's down should support our market a little bit. Obviously, we're just producing too much here locally. This has been driven by cash for the most part, but the futures is quite a bit below the cash. And overall demand in the U.S. and the economy is fairly strong. So I'm going to go out and say that I think we've made a low for hogs, but I'm not saying I'm cheering it on and thinking this is going to go skyrocketing higher. I think we just probably trend sideways now.
All right, fair enough. Well, let's wrap it up here today. Across the board, final thoughts, anything you want to reiterate to folks as they're thinking about managing their risk and managing their marketing plan in this environment, Dwayne?
Well, let's go back to what I said on corn. We're at 403 here as we get into the close today. I think 393 was always kind of my harvest low target. I think that can still hold because I think we got a crop that from the USA standpoint is as big as it's going to get. I think so. Now, remember, I'm in the Western Corn Belt where things aren't as peachy as the Eastern Corn Belt. So you can interview a different broker tomorrow and get a different perspective. So take that with your management into your toolbox, I guess. I think we're nearly there. Soybeans, I'm afraid we don't have a lot of chart support for a while yet. I'm really shocked China's not in here buying more from us. So I think they will, though. When we're at 3 or 4 year lows, why wouldn't they buy to restock some of the reserves? So again, I don't want to sound crazy bullish and I don't want anyone going long the board, but I think we're going to run out of bearish news here pretty quick and run out of sellers. So I don't think, let's not panic sell, but let's manage your risk like you said before. You hit it really well.
Well, Dwayne, if folks want to have a conversation with you, talk about managing that risk, I know they could do that. They're at Bolt Marketing. What is the best way they can get in contact with you, Dwayne?
Yeah, probably the best way is direct. Call us at 605-448-2365, or they can always check us out online at boltmarketingllc.com.
Dwayne Bussey with Bolt Marketing. Always good to chat with you, my friend. Have a great week. We'll talk to you again soon.
You too. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.